Welcome back to John and Jessica's journey to homeownership. In this episode, we're going to explore one of the most important factors in buying a home: your credit score. Your credit score is a 3-digit number that lenders use to assess how risky it might be to lend you money. It can make a big difference in the home buying process, affecting everything from the loan amount to your monthly payments.
John, I've heard that credit scores can really impact our mortgage. How does that work?
Yeah, I'm curious too. What should we know about how our credit scores affect buying a home?
First, let's break down what a credit score is. Your credit score is based on your credit history, which includes things like your payment history, amounts owed, length of credit history, types of credit used, and new credit inquiries. Credit scores typically range from 300 to 850. The higher your score, the better your chances of getting approved for a loan with favorable terms. But how exactly does your credit score affect your mortgage? Well, it directly influences the loan pricing, which is a combination of your interest rate and other fees. A higher credit score can qualify you for a lower interest rate, which means lower monthly mortgage payments. For example, a higher credit score could mean a lower interest rate, saving you hundreds of dollars each month on your mortgage. On the other hand, a lower credit score could result in a higher interest rate, making your monthly payments more expensive. But it doesn't stop there. Your credit score can also affect the amount you're able to borrow and the terms of the loan. With a higher credit score, lenders may be more willing to offer you a larger loan with more favorable terms. If your credit score is lower, lenders might limit the amount they're willing to lend you. They could also require a larger down payment to offset the perceived risk. For example, while someone with a better credit score might be able to secure a loan with just a 3% down payment, someone with a lower score might need to put down 10% or even more.
So, improving our credit scores could help us save money in the long run and give us more options, right?
Exactly, Jessica. But how do we improve our scores?
Some tips to help boost your credit score before you apply for a mortgage. Pay your bills on time. Payment history is a significant factor in your credit score, so make sure you never miss a payment. Reduce your debt. Try to pay down credit card balances and other loans to lower your credit utilization ratio. Avoid opening new credit accounts. Each new account can lower your average account age, which can impact your score. Check your credit report for errors. Sometimes mistakes can drag down your score, so be sure to review your report and dispute any inaccuracies. By taking these steps, John and Jessica can improve their credit scores, which will help them qualify for a better mortgage and get one step closer to their dream home. Like and subscribe, and in our next episode, we'll talk about saving for a down payment and what options are available. See you next time on John and Jessica's journey to homeownership.